Is the market doomed no matter what Jerome Powell does during FOMC? With the opportunity for a rate cut on the table, I want to talk about exactly why a rate cut could actually be extremely bearish for the stock market and why it could actually lead to the stock market going into a crash. Everything we talk about today will be 100% my opinion and what I think I see coming. Obviously, everybody will have their own opinion, so feel free to make yours known in the comments below. But today, I do want to start out with a history lesson because it's important to understand how we got to where we are if we're going to understand on where we are likely going in the future. So since this video is focused about my opinion and stance, as you can see here back since November of 2023, is that Jerome Powell should pause rates until we go into a recession. And if you do not understand why I said that, do not worry, I'm going to explain it. But first, I do want to get into the history lesson of how we got here. So the first thing we need to do is go all the way back to 2020 when the market crashed in March of 2020. And the reason we crashed is very well known. And during this event, the market was crashing down in a straight line and everybody was panicking and freaking out and dumping their stocks because they were thinking there's no way the stock market could ever go higher again with what was going on around the world at the time and the significant slowdown in economic activity. However, Jerome Powell came in and Jerome Powell saved the day by doing emergency rate cuts all the way down to 0 basis points so that immediately the Fed came in and saved the market and immediately started printing money. And with 0% interest rates, the market loved that drug that it was getting and it had a very strong bull rally, just making brand new all-time highs by the beginning of 2022 after a market crash low. And in a market where everybody thought it was impossible for the market to go higher, with all of the money printing and economic activity that was stimulated from that and the 0 basis point rate cuts, the market ate that up and there was a huge influx of liquidity into the market. However, during this time, Jerome Powell was completely ignoring the fact that all of this behavior and manipulation from the Federal Reserve was going to lead to a large influx of inflation. And then in 2022, we had a bear market, and this was largely due to inflation going up through the roof. And by my calculation, since 2021, we have had up to 35% inflation. So if you are not making 35% more money in the last few years, you're actually less wealthy than you were before this inflation. So again, because this video is my opinion, I am going to tell you outright that I believe inflation is no less than 35%. You could probably even say in some areas it's much more than that. Now, due to this, Jerome Powell could not sit idle, and by July of 2023, so we'll just call that 2023, basis points have gone all the way up to as much as 550 basis points, which is a huge increase from our 0 basis points. Now, due to that, you could say, why is the market going higher if basis points are going up? And a lot of this growth was obviously due to AI, and we have a lot of growth from AI companies who are doing what could be possibly known as the next industrial revolution. Now, with that being said, and all of the growth we are currently getting in the S&P 500, we are now aware that inflation is starting to normalize, but we cannot rule out the fact that we already have 35% inflation, and inflation is very sticky. Now, if you know anything about inflation, you likely have to go all the way back into the 70s, and it is very difficult to defeat inflation if you do not actually have a period of declining growth. That would be known as a recession, and that is why my opinion is that Jerome Powell should pause the rates right here until we go into a recession, because if you had to pick the lesser of two evils, a mild recession is a lot better than rampant inflation, which is constantly eroding your dollar. If you are not making more money, inflation is actually causing you to continue to lose money. That is a cycle that is not sustainable, and eventually the bill comes due. And with all of the money printing and high rates that we now have an incredible amount of debt that is very difficult to service at high rates. And there will never be a politician or a person in power that wants to have a budget cut and wants to run on the platform that they are going to spend less money and pay down debt. So for this situation, you have to think logically and you have to block out anything a politician or talking head is telling you, because this is not a problem that is solved with politics. This is actual money we are talking about, and we have a credible amount of debt with very high interest. And if we have this growing market that is damn near all-time highs, and we are already talking about lowering rates, we are essentially giving a crack addict market more crack because we are only going to add the opportunity for even more liquidity into this market. So with a growing market and a very strong economy, you could argue there is absolutely no reason to lower rates, even though a lot of people are asking for these rate cuts. But again, nobody is ever going to run on this platform that they're going to spend less money and use money to pay down debt. Now, eventually we know this bill will come due. And right now we know from the bond market is looking for somewhere around 350 basis points, which does give Jerome Powell a little bit of wiggle room for cuts here. But I am going to make the argument that Jerome Powell is stuck between a rock and a hard place because we have this inflation that I'm calculating as at least 35%. So if we are currently at 550 basis points and the market thinks we could go down to 350 basis points, you have to remember that the only way this is going to work is that if inflation does not come right back into the market. So the argument that I want to make here with a market that is sitting up against brand new all-time highs, you have a market that is extremely inflated. And if we use the metaphor of weight loss, we have a very fat market right now. And we are talking about a market that needs no stimulus from the Federal Reserve currently, which is very evident from price about to make a brand new all-time high. And with rate cuts, we could see the market just continue to go even higher in the event that inflation does not return and we can avoid a recession. So if we want this market to be healthy, we need to start feeding it some broccoli, and that could be in the form of keeping these rate hikes higher, because with a growing economy, it doesn't need to be easy to go get debt. This is a very entitled market and a very entitled generation that thinks mortgages should always have low interest rates and you should be able to go afford a house whenever you want one. And we can all just go bid up housing prices and we can all just go shopping and buying everything we want, and everything is going to be fine because we're just going to lower rates and print more money. But I'm sorry to tell you, that is not how things actually work. Eventually, this fat market will have to hit the gym and start lifting some weights and eating their broccoli and doing some curls, or it will never lose weight and it'll never become healthy. And if this market stays extremely unhealthy, eventually the bill comes due and we will see a very major crash. So I am going to make the argument right now that any basis point cuts that we start to get will lead to an unhealthy market, because I do believe that inflation will continue to go up if rates are lowered before we go into a recession. And I'm also in the camp that inflation is already 35%. So if we do not go into a mild recession, this inflation number will never start to decrease. And if it does not start to decrease, we are still heading towards a financial crisis that nobody will see coming. And by the time we hear that we've hit the soft landing and the Fed is lowering rates, and that is going to be a sign that we avoided the hard landing and the soft landing is here, will be the exact moment in time that we actually see the stock market crashing. So do not get complacent here. If I just draw a very simple trend line, it is not out of the ordinary to expect that the market could come back down to this trend line and revisit it at some point. And if you look back, that is also a perfect retest of the 2022 highs. And this is a very healthy thing. Do not rule it out as a possibility. And do not rule it out as a possibility that Jerome Powell could actually incite the selling that causes this to happen. Again, this is a market addicted to crack. It wants even more crack with the rate cuts. And no politicians are ever going to say that they want to keep rates hiked or to keep rates paused here, because no politician wants to run on a platform that they're sending the economy into a recession. This is a channel about the stock market, and we could not care less about politics. In my opinion, the lesser of two evils would be a very mild recession where we would all be just fine. We would still get by and inflation would start to come down. And while inflation is coming down, we would definitely see a little bit of a period of cycle within the business growth where we would have some trouble and we would have some problems. But in my opinion, if inflation comes roaring back and we just see this 35% inflation number going even higher, and let's say it gets all the way up to 50%, you are going to be no better off, and we are still going to get a very hard recession after this. So in my opinion, if you are choosing the lesser of two evils, you are 100% going to pick the mild recession case. And in my opinion, that means Jerome Powell does not have a lot of wiggle room here to lower rates. Doesn't mean he'll do what I think is correct, because obviously there could be plenty of manipulation. And this scenario in the short term could look great because lower rates could mean the stock market continues to go higher and everybody is happy and nothing bad happens in the short term. But you have to remember, in the longer term, we are still going to get that hard crash landing. So there is a lot of speculation here, but you have to remember this is an extremely valid scenario that we get this very large sell-off back down into this trend line and a revisit of prices in the S&P 500 that a lot of people could be ruling out completely. So if there's anything you should take away from this video, it's that there is immense risk in the market and it could be right around the corner with FOMC, because smart money moves the market and smart money is very aware of everything that I just told you. Whether you agree with me or not is completely fine. We all have our own opinions. I gave you the reasons why I believe what I believe. That doesn't mean that I'm going to be correct, and that doesn't mean that what I said has to happen. But you should at least consider it, and you should factor in the possibility that rate cuts, even though they could sound very bullish to you in the short term, they actually could be extremely bearish in the longer term. In my opinion, if Jerome Powell was going to do the lesser of two evils, he would pause rates where they are, let us go through a mild recession, let the market figure out where it needs to be as far as rates go and where prices should be. The market is fully capable of taking care of itself. It does not need any manipulation from the Federal Reserve at this point. And the lesser of two evils within a business cycle could be a very simple mild recession, because if you view a business cycle, it is never always going up. There are going to be periods of declining growth, but what's more important is long term, we just continue to see growth. And I do believe a mild recession is not an issue we need to be worried about. Our bigger issue would be that we get more inflation because the Federal Reserve starts to lower rates too soon. So let me know what you think in the comments below. Am I completely out of my mind, or am I onto something here? And I will definitely have my popcorn ready for FOMC, and I can't wait to see how the market reacts and what kind of trading we get from here. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.